and welcome back to GoldStockTrades.com. Today we have a new and special guest with us, Peter Giannoulis. Peter Giannoulis is the CEO of Allegiant Gold, which can be traded as AU on the TSX Venture. Peter also has a background. He was a senior portfolio manager at Salomon Brothers, focused on junior mining and mining. He has 25 years experience managing money in the junior sector, so he has a really good perspective, especially for my subscribers many who are coming into the junior mining sector. Peter's had a lot of experience in many different cycles, especially this last bear market, and we can learn a lot from his experience. So, Peter, thank you so much for being here with us today and for giving us some information about junior mining, some things to look at in companies and evaluating them, and a little bit in what's going on in this market and what you're doing now with Allegiant Gold in Nevada.
Thank you, Jeb. It's been a pleasure. I've been following you for years, and I'm excited for what you've been doing. I think you're bringing an amazing service to people. I think I've been doing this for 25 years, and it's very nice to see an individual who's more concerned about bringing great ideas to investors, doing their due diligence. I've been doing this for 25 years. Just a little correction: I was part of the senior management committee of Salomon Brothers Hedge Fund Group for those 10 years. I was the senior portfolio manager at Carrollton, which was a fund that I created in 2005 to 2017, which invested almost exclusively in the junior exploration and mining sector. And it's great and refreshing to see someone like you, with primary concern is protecting investors. And I think that I can't stress enough the amount of level of due diligence that's required in this sector. And I can try to impart some of my learning lessons over 25 years, but the reality is most of my learning lessons came in the last 8 to 10 years, not in the first 14.
Yeah, well, it's called the School of Hard Knocks for a reason. And, we can go to university and I know that you've gone to the top universities, but you really, the School of Hard Knocks teaches you a lot. So, could you give us a little bit of some of the things that you've learned in this last bear market cycle, because you've managed a lot of money, and what investors should be cautious of?
Well, I think investors need, when they go into the precious metals exploration or mining sector, I think they need to segment it into buckets. What is a mining company? What is a development stage company? What's an exploration? And within each of those, there's different subsegments. So an exploration will have late stage, mid stage, and kind of very early stage exploration companies. I focus primarily on the exploration side, because I think that offers, if you do your due diligence, it offers, in my opinion, the best risk to return out there in my 25 years experience. But these things come in cycles. So some of the lessons I'll try to impart, and very similar to yours, is not a linear function, meaning you need to apply these lessons based on whatever part of the cycle you are in at that time. And so what I'm going to say today may not have applied even 6 months ago or a year ago as we move from a neutral market to a bull market. My general nature is more conservative on the exploration side, but there are times when I believe companies and management need to move from the conservative side of it to a more aggressive and promotional side of it. With that being said, some of the learning lessons I've learned, I like companies, and I spent most of my career also in Latin America and the Americas. So I've dealt with Canada, the U.S., Mexico, and all the way down to the Rio, all the way down to Tierra del Fuego in Argentina, as well as some in Africa. I think jurisdiction continues to be maybe the single most important thing. It's always been an important issue. But I will say, given the economic malaise that is occurring, and I do believe will get worse, and I don't mean it's going to get worse for everyone equally, it just means as a group, as a human race, things are going to get a little bit more challenging. I think that in places where jurisdiction and property rights are not well established, governments have a penchant and tendency to increase taxes, licenses, make it more difficult for companies to do business. And there's no other sector that's as easy to target than the mining sector, simply because it is a long duration business. It takes a long time to develop something, to find something, develop it, and then put it into production. You can't just get frustrated because the Ecuadorian government changed the rules on you and you're going to take your mine and move it. You've got to basically stick it out. So jurisdiction would be one. With respect to exploration companies, I always focus on companies and how they're spending money. So G&A to me is one of those red flags. I do not like exploration companies that have high G&A burns, and particularly ones that spend a significant amount of money or equal amount of money in promotion versus exploration work. So if you ask me, I think that is a red flag almost always. Now, we are 400 or 500 exploration companies in the world in precious metals. Everyone's trying to get a position in terms of investor attention and trying to raise our hand and saying we're here. I think there's nothing wrong with that. I think education is very important, but I do think I would warn individuals investing that that they should look at the income statement and how companies are spending money. The third thing I would talk about, and this is not in any order of importance, but the third thing is with respect to dilution. And there are times in cycles where it's good to do nothing. And I know investors don't want to hear that, but Allegiant for a year and a half did nothing because we could have drilled and pulled up some great holes, but we realized that wasn't just the time to do it, and spending that money would not have been efficient. Now, together with that, I think companies having a low G&A burn rate is very important to executing that strategy of low dilution. Because if you're burning a lot of money in non-exploration work, then you're forced to continually do exploration work to justify raising money. So it becomes this vicious circle of dilution. Allegiant, which is the company I'm involved in and have been involved for 12 years, has the luxury of having farmed out many of their projects to focus on their single flagship project. And that allows Allegiant to generate cash and share acquisitions from other companies and essentially become a break-even company from a pubco cost or a G&A cost. So Allegiant doesn't have to raise money to stay alive. Allegiant can just sit still, do nothing, and raise money when the markets are good to be able to advance their projects or their flagship project. The fourth aspect and learning lesson is I want to see management have real money invested in their company. And I don't mean, and excuse my word, the bullshit RTO money. I got cents at 1/10 of a cent management, and then they blow out of their shares at 5 or 10 cents. Even though the stock may be worth 50 cents, they don't really care. They made all their money from 0.1 cent up to 5 or 10 cents. I used to avoid like the plague companies that were coming out of some restructuring. You know that the management's average position was 0.1 cent, and that at Allegiant, every share, I'm the largest shareholder. Every single share I bought in the open market. I did not have any shares from any other RTO or whatever they are or spin out. All of my shares that I bought were in the open market at 7 cents, 10 cents, 12, 27, 33 yesterday. So how
does an investor look at that in a company? How would you look at that as when you would do your due diligence? I guess insider filings.
Insider filings, but I would just outright. First of all, I would go to insider filings. I would go through their annual circular because they have to disclose. Companies have to disclose a lot more detail in their annual circular, and then I would either contact the management and ask them that question point blank. Any management that will not answer that question, that's a major red flag. And any management that won't return your call is not worthy of your capital.
So what's the question to ask for an investor? What was that again? How much do you own? Ask the CEO, how much does the CEO own and what did he pay for the stock? Is that the correct question?
What did he or she pay for the stock, and also importantly, how did they acquire that stock? Was it options? Was it an RSU grant? Was it they acquired it when it was private? I would understand the history of that company, and I would focus on the period of time that companies that were private that have become public, and understand during that private, what was their average share price that they acquired. And then I would ask, how many shares have you bought in the public market over the last 6 months? That's public knowledge because they have to file. I want to see CEOs with real money put together. To be fair and to be fair to everyone, not everyone has the same resources. So it's unfair for a up-and-coming CEO is 25 or 30 years old, and I'm almost 50, to have the same resources that I may have had over my career, and expect that person to put $1 million to work in their company. That's not fair as well, and I want to be balanced about that. But as a proportion of their net worth, you want to see management put real money in, and I'm very, because if they have real money, they're going to take the dilution aspect really important, like I do. At Allegiant, we didn't raise money for 2 years, and the reason is I didn't want to dilute myself. And today we just did a financing 2 months ago. We were offered a lot more money than we took. We could have upsized and did all the crazy things that everyone's doing, and we decided not to, because if I upsize, I'm just diluting my position more, and I don't want to do that. And I think everyone, and it's not that just Allegiant runs it perfectly and everything's great. And I'm just trying to share Allegiant. I'm trying to share my learning lessons. So it doesn't matter. There's some other very good companies out there. Allegiant, in my opinion, is one of the better ones, but I'm biased. I think investors need to do their due diligence, and any investor that's going to put serious money to work needs to contact people like you, or they need to contact the management, or both. Actually, in my opinion, it should be both.
And I always tell my subscribers, I'm just a stepping stone. You do have to go to the website. You have to go call up the CEO. You have to ask the hard questions and make the hard decisions yourself. I can just lead you to good ideas, but you still have to do your own due diligence, as Peter says, and make a phone call and ask the hard questions like the skin in the game, and that make sure that management is aligned with shareholders. So very important. And let's focus on Allegiant Gold. I know I've been following this since the company was spun out. I invested in the, I believe it was they did a financing during the spin out, and I've been following it since the beginning. I've even gone to the properties with Andy Wallace, who is the student of John Livermore. Yeah. If you've studied mining and the history of mining in the United States, and especially in Nevada, Nevada was neglected. It was never known as a gold state. It was known as the silver state. And John Livermore, because of his belief, he was from California, he founded a company called Cordex. He lived a very long life, and he is the reason Nevada has become, if it was a country, I think the third largest gold producer at the lowest cost price in the world. That is because of John Livermore. His student is Andy Wallace, and he is an advisor on the board, or he's working closely with you, right, Peter?
Yeah. So a little bit more history to that. Andy and I have worked together for 15 years. Allegiant was a spinoff of Columbus Gold. Columbus Gold had two main aspects. They had the Nevada assets, which is Allegiant Gold, and then they had a major property, and one of the probably best undeveloped properties in the world, which was in French Guiana. We spun it off in 2018 to create Allegiant Gold, which was just a U.S.-centered focus company. The first CEO of Allegiant Gold was Andy Wallace. Andy, in 2019, retired for numerous reasons, and I won't go into every of them. And when I took over Allegiant Gold in September as the CEO, I brought back Andy Wallace. I brought him back first as an advisor, and then Andy now is our chief geologist and also back on the board of directors. Well, not back. This is the first time he was on the board of directors. So he just joined his board of directors. Andy is intimately involved. He's the one who actually selected all of our 9 projects that we had over the last 14 years. Our strategy, and Andy is also a big believer. So let's focus on what we have right now. And so one of our big benefits is that we're in one of the best jurisdictions in the world, as you've alluded to. But not only that, we're not a typical junior where there's some great drill results out there. We're hanging it together to create a resource. So I look at the 500 companies out there. I look at how many are in safe jurisdictions, and then how many have a 1 million ounce oxide resource. It's less than 5%, I think. And so, we are one of those exclusive explorers, or at least in that exclusive company of having a major resource that's growing, that appears to be growing and has significant growth potential in amazing jurisdiction. And, as I talked about, I've seen a lot of great 1 and 2 million ounce, 3 million ounce deposits in Ecuador and Peru and Brazil. The problem is that it may take you $300, $400, $500 million in CapEx to build it, because you need to draw electricity, which is the case in French Guiana. You need to have a whole infrastructure team to build that, or up in Alaska. The difference is that in Eastside, which is our flagship project, and some of the other companies out there, you already have electricity, you already have roads, you have water, you have almost every element. So your CapEx drops significantly relative to anyone else. That's what makes Nevada so attractive, besides the property rights and the pro mining industry. When I talk about jurisdiction, I talk about the infrastructure, because what could cost $300 million in South America is going to cost me $100 million in Nevada to build. So that excess $200 million, even though the grade may be lower, strip may be higher, it's still more economical. And then you add the other aspect of jurisdiction, which is taxes. Generally in Latin America and Africa, they want to keep 50% of the profit. So, when you talk about 3 grams a ton in an open pit mine in somewhere in Ecuador, or 2.5, what's only yours is only 1.25, right? So, you need to put plus triple the CapEx that you're going to have to deal with in other parts of the world. Now, getting back to Andy, Andy is, we're gearing up for our drill program, which is going to start, and we haven't announced it yet. So in the next week, we'll announce the date when we're going to be starting. We're going to be announcing our drill date. We've just finished our geophysics, and we'll talk about that. And we're going to be hitting Eastside very hard. We're going to be one of the, probably, my guess is probably one of the junior exploration companies with the most significant amount of meters drilled over the next 12 months. And we've been very, very busy over the last month getting ready for that, and Andy has been very much leading that effort. So we're going to provide an update next week, and a full update on what we plan to do at Eastside. But I think people will see how significant it will be.
So today we're speaking with the CEO of Allegiant Gold, and we're going to pretty much leave it at this point, because it's already a 20-minute interview, but we're hoping, as the company has more news and more activity, that we're going to have Peter back with us and educating us more about investing and questions to ask CEOs, and some of the experiences he has of 25 years of investment experience. Now he's on the other side as a CEO, running the company with the perspective of as the investors see it. That's important to see as a CEO. Plus, we have this Cordex team, which I'll be highlighting more about their history. These are the top projects that have been sort of held onto by this team that's credited with, I think, the best track record in Nevada. Yeah. Unprecedented 9 gold discoveries. They have advanced. I believe that there's going to be multiple catalysts going forward. So stay tuned. Allegiant Gold, which can be traded as AUAU on TSX Venture. It also can be traded as AUXXF on the OTC. You can always call Peter or email him. Peter, what is your email address, the contact? I know it's allegiantgold.com.
Yeah, so it's very simple. Peter@allegiantgold.com. And I return every email. I will generally get back to everyone very quickly. I was on the other side as an investor, so I understand the importance of that, and I think it's respectful to get back to everyone in a timely manner, and we do that. I mean, there are days where it's sometimes easier and some days a little bit more difficult. I'll just one last thing, Jeb, and I know we've gone a little bit longer. Allegiant also has farm outs, which we'll be drilling. One of them is New Placer Gold, which we have farmed out our Bolo project. We own 100% of that New Placer Dome. can earn into 50% of that. They're going to be drilling that. They've already drilled it. So
That looks like it could be huge. That outcrop, that high grade outcrop, and what they're drilling now could be a big program. It could be pretty big this year.
Yeah, for us, we're excited because someone else is spending the money on our project, and we get paid to that on top of them doing the work. So,
if they put that together there, that could be. I've been to the project. It's a nice project.
Yeah, no, it was our. We ranked it as our top of our 3 projects based on jurisdiction, ease of mining, permitting, and everything. Bolo would have been there. Eastside
obviously. Other GOs about it, and they've also told me very good things about that project. I mean, of course, Andy Wallace also.
Yep, Andy was not in favor of farming that one out. I can put that on the record and tell you he was not happy of farming that out, but it was done years ago, and
so they're drilling that right now, right? There could be news coming up in the next 6 weeks or 8 weeks from there.
No, they started drilling about 3 weeks ago. My guess is assays are taking about 3 to 4 weeks. I would anticipate the first assays coming out in 2 weeks at the latest.
So AllegiantGold.com. Get more information, contact Peter. Thank you so much for being here with us today, Peter, and we'll keep posted and we'll be looking out for updates from the company.
Yeah, keep the great work up, Jeb. You've done amazing. Thank you.
Thank you.
Take care.